everyone, you're watching Market Fatafat on ET now with me, Mubina Kapasi. Markets deeper in the red. We have the Sensex losing 115 points. The Nifty is firmly below 12,200. So the losing momentum continues right here on the Lal Street, even on expiry day. Interestingly, it's only the small cap index that's managing to stand out as a spot of green, higher by 0.4%. But Market Fatafat, as you know, is all about talking on those individual stocks and showing you those individual stocks that are actually buzzing in trade today. So let's introduce Varun and Soumya from our research desk. And today we are joined by Rajesh Palviya of Axis Securities to talk about the technicals of individual stocks. Thank you everyone for joining in. And let's kickstart the show with Bharti Infratel. The long stop date for the Indus merger deal has yet again been extended to the 24th of Feb. Remember that the deal, which was decided back in April 2018 and had a long stop date of October 2019, had to be extended to 24 December 2019. But again, because of the lack of government approvals, it's a second extension that the board had to decide on. Remember, this is quite an important one because it would provide a monetization strategy for the current holders, that's Airtel, etc. And this merger is completely contingent upon the receipt of approvals. Even now, various quarters of the finance ministry approvals haven't been received, and hence the deal is in a bit of a limbo at this juncture. Bharti Infratel, which was actually losing approximately 1.5%, has now gained, so it's completely reversed course today in trade. Okay, let's talk about, on the flip side, the metal stocks that are doing fairly well, and especially the steel stocks. We'll talk about the factors involving perhaps rather contributing to this rally in just a bit. But Rajesh, yeah, let's talk about a steel authority at 42 rupees. What do you make of this one?
Yeah, good afternoon, Mobina. If you look at the overall the metal pack, we have seen a lot of buying interest was there in the metal pack in last couple of days. And looking at the setup, I feel metal stocks may perform well from the current level also. So especially if you talk about the sale, the currently sale is trading above all its important moving average on the medium term basis. So my view is positive on the sale, and I feel that sale may show further more strength from the current level, and one can hold the position. Even at the current juncture, one can buy the fresh position at the current juncture with a stop loss of 39, and I am expecting upside towards 46 level.
Okay, so that's the strategy then recommended by Rajesh on Steel Authority. Varun, Reliance Industries, I suppose a bonus of sorts for Reliance retail shareholders.
Right, Mubina. So basically what's come on a newspaper article is that they might possibly looking at a share swap for RIL and Reliance Retail. So 4:1, 4 shares of Reliance Retail will get you 1 share in Reliance Industries. This values Reliance Retail at about 2.5 lakh crores. If you look at the sales of Reliance, it's around it's around 1.3 lakh crore, and the EBITDA is around 6,000 crores. So it's a very rich valuation, and the swap will also be open to employees that may have taken ESOPs in the recent past. They'll also be eligible with those shares to get RIL shares instead. So this structure, basically what it'll do is it'll amalgamate the Reliance Retail revenues and profits into the RIL counter without changing the structure, because Reliance Retail is already a subsidiary of Reliance Industries. So that's basically what it looks like on the face of it. Early stage, flagging off from us. We'll obviously have to wait till the detailed structures announced and how it actually goes through. If at all it does, sounds like they're just mulling this for now. Nonetheless, it will have a bearing on the stock. Ultimately, if that does happen, it will show a significant boost to the profits as well as the sales, which Reliance anyways trades at quite a decent multiple. So.
Okay, so that's then the word on Reliance Industries. By the way, the stock price is down by about 1% today in trade. Soumya, IB housing momentum continues over here. Is there any specific reason? By the way, this one's actually off the day's high now.
Yes, that's right, Mubina. In fact, we were flagging this one off for its gaining spree, but looks like it has reversed all the moving gains that it had fared. But right now, it's actually trading with a negative bias of over 1%. Not just this, in fact, on December 24th, that's on Tuesday, we did see a lot of volume activity coming in the stock. But right now, as we speak, the stock's falling and it's close to about 1%.
Well, yeah, it's actually reversed course. Like I said, India Bulls Housing is now, in fact, at the day's low, 0.8% gone. Now, we were talking about the metal stocks earlier in the day and how they're all buzzing. Steel stocks in particular are really standing out. Today as well, Vedanta is in fact your top Nifty gainer, and it's followed by two steel stocks, JSW Steel as well as Tata Steel. Take a look at the way they're gaining. Very smart moves over here. Now, do remember that there are several factors. Firstly, the whole US-China trade war culmination. Secondly, Chinese steel spreads have started slowly showing a bit of a bounce, and we spoke to companies like JSPL as well just last week, and he said that he expects steel prices to go up by 1,000 rupees per ton next month. Remember, the second quarter was a really tough one, but it was slowly in October and November that we did see a rebound come by in steel prices. Not necessary that the fall in steel prices had not exactly trickled down to spreads, because coking coal prices as well were lower. But now that steel prices have gone up, perhaps spreads will become even stronger than before. That's really the expectation, and that may be a reason why you're seeing steel stocks rally continuously. The metal index too firm as ever. And Rajesh, RBL Bank, this one's had quite a tough year in 2019 after being a great wealth creator. What do you expect this one to do from here on?
Yeah, if you look at the setup of RBL Bank, stock has corrected almost more than 10% for this month. And looking at the near term as well as the short term charts, stock is still in the negative territory, and stock is continuously facing steep resistance at around 345 350 zone. So till the stock not manages to cross about 350 level on the weekly closing basis, I feel further more pressure would remain in the stock prices. And I feel that if it's continued to remain below 345 350 zone, then the possible lower side target can be seen around 315 in the near term to short term basis. So my advice would be to remain short in the RBL Bank with a stop loss of 342 at the current level.
Okay, so that's Rajesh's recommendation on what you could do to scout for a trading opportunity in a stock like RBL. And Varun, the downgrades continue to pour in for a Yes Bank.
Right, Mabina. So Citi's come out with the downgrade, or rather maintaining their sell stance on the stock. Only difference is that the price has now been lowered by another 10%. So the previous target was 50 rupees. Now that target has been lowered to 46 rupees, showing the extended pessimism they have on the counter. They think the EPS estimates need to be trimmed as well by an additional 4-5% based on what was previously projected. So the financials will take a hit. We all know about Yes Bank's watch list looming, so no surprises there. We'll definitely be looking out for the slippages this quarter and to what tune they come in, as well as that highly awaited fundraise which we're still awaiting as well. If that does not come through, some other brokers like Jefferies have much lower targets on this, the lowest being I think somewhere around 38 rupees. So there's still a fair bit of downside here if the money doesn't come in. Obviously with the results season around the corner, there should be some developments on that pretty soon.
Okay, by the way, as we speak, Yes Bank has actually fallen to the day's low. It's 3.5% gone, and it's the top Nifty loser today. Now, what is showing a bout of recovery is BPCL. Soumya?
Well, yes, Mubina will be flagging this one on the back that the divestment deadline is unlikely to be met by the government. In fact, they had earlier notified that December 24th is the likely date when they'll go for the divestment, wherein they're looking to offload 3.3% stake in the company. Well, this is definitely not happening. In fact, this has been pushed to actually March, and so let's see when this actually happens. But as of now, this has greater implications given the fiscal deficit gap was to be meant by the amount that was to be received through this disinvestment. However, as we speak, once again we are seeing some amount of negative reaction in the stock. However, it's trading flat with a negative bias of 0.2%.
Okay, 477 rupees for BPCL. It's kind of a quiet move that we are seeing in this stock today in trade. Now I want to talk about NMDC. So many reasons why this one will be in focus, even in the year to come. Firstly, because NMDC has last week received that extension from the state government on the mine leases that it owns, so that's a positive. Also, it's going to start operations at the recently allocated mines in the next 1 year. So on the production side, they may be more or less sorted. But furthermore, like I told you, JSPL did say that steel prices are expected to rise, and miners as well, in anticipation of that, have already indulged in some price hikes. So according to JSPL, miners have hiked prices by between 300 to 400 rupees, two 400 rupees per ton from 300 rupees per ton. Additionally, why NMDC stands to benefit is because a lot of Odisha mines are set, the leases of those Odisha mines are set to expire in March. So that will also obviously give NMDC an opportunity to expand on its market, to fill in the gaps perhaps, it'll also give a boost to pricing, right? Because obviously supply is an issue. NMDC will be in focus because of all of these reasons, and watch out for this one. It's currently at 126 rupees. Now we'll do one thing, we'll take a very short break right here on Market Fatafat. Do come right back. Welcome back. You're watching Market Fatafat on ET. Now let's continue with our countdown. And Rajesh, Bandhan Bank, this one as well was gaining, but now it's absolutely flattened out. Anything that you would like to observe here?
See, if you look at the overall setup, stock has witnessed, selling pressure throughout the month and almost corrected more than 10% in the current month. And looking at the underperformance in compared to other private bank, I feel, furthermore, pressure we may see in the coming trading session for the Bandhan Bank. As we look at the setup also, stock is trading below all its important moving average. And looking at the daily as well as the weekly setup, I feel, furthermore pressure we can see in the near term. So 485, 480 is the level where I feel that stock can further slide from the current level. Till stock not crosses above 510 level, pressure would be remain in the stock prices, and 480 level can be seen in the near term basis.
Okay, so that's then the recommendation on a Bandhan Bank. Take your decision at 498 rupees if you'd like to invest. It could slide, however, according to Rajesh, to levels of 485, 480. And Varun, Force Motors, what's the reason for flagging this one off?
So Force Motors is predominantly a rural-linked company. That's because a lot of these Jeeps and heavy passenger vehicles and these heavy motors tend to be used more in the rural areas. Now, Force, if you look at the sales, despite the auto slowdown, the sales on a TTM basis are down less than 10%. In fact, they're in the mid 6 to 7% range. Also, if you look at the margins, while they have come off a fair bit and the absolute EBITDA has declined on a TTM basis, margin-wise, it's only 100 basis points. So if you look at the slowdown, a really low base, and you look at the fact that the stock price has halved over the last year. So it used to trade at around 1850, which is now around 1,000 rupees or 1,100 rupees. Post this big up move today, it's still really seen a lot of value erosion. So now the next trigger for this stock will be the budget. We always know that the maximum relief during the budget comes to the agrarian economy and to the agricultural side of things. Recently the Maharashtra government has had a loan waiver for all the farmers. So this whole attempt to inspire excess capital in rural regions. So typically what happens is a company like Force should do better in H2, given that the rural pickup will be seen on account of the budget. So anticipate, and even brokerages and analysts are saying that that's what they expect, that H2 should be a better quarter for should be a better half for the company going forward. So this might be the first move of some optimism in H2 that the street seems to be expecting with Force Motors.
Okay, that's Force Motors for you, a 13% rise seen just in today's trading session. And Sami, another stock that's showing a nice rally is Dishman after the big bad week that it had.
Well, yes, in fact, some respite for the stakeholders and shareholders of Dishman Carbogen. Well, it has snapped 6 days of losing streak. Give you a little context of this one. Ever since the news of Income Tax Department actually conducting search and survey at their offices and premises came to the forefront, we did see the stock actually losing quite much. In fact, the last few days we did see the stock getting locked in the lower circuit as well. But right now, as we speak, we see that there's some amount of positive reflection coming in the stock. It's gaining close to about 10%. Definitely there's something it's actually which is good for the company.
Well, yes, 10% higher for Dishman. Remember that the wars that hold here with respect to the income tax search that was conducted in various premises. We had the management as well speak first to ET, now reacting to the same today about a recovery. All right, Emami meantime is on our radar. This after, there are reports that it looks like the Emami Group will be able to achieve its earlier stated aim of turning debt-free by FY20. Remember, the entire Emami Group has been having this one overhang of the debt on its books, and that in turn had also led to promoter pledge. However, they have managed to pare it down. Back in April or May of this year, they did sell off some of its some of the promoter-owned shares, in the listed entity, that's Emami. So they brought down the debt. Plus, now rumor mills are abuzz that Ultratech Cement may actually be buying Emami's cement division. So that will be another 5 to 6 odd grand added to Emami's kitty. So that will also help it pare down debt. And yes, hopefully by FY20 we should see it turn debt-free. An additional boost for today could also be that FMCG stocks are buzzing. Marico, Jubilant Food, all of these guys are actually buzzing in trade. So that could as well be an added impetus. However, Emami is at the days, it's actually come off quite a bit from the day's high. Okay, Rajesh, let's talk about Federal Bank. Anything that you'd like to observe here?
See, if you look at the setup of Federal Bank, since last 2 months, stock is consolidating in range of 82 to 88. And looking at the consolidation, I feel, stock is poised for, a higher side breakout of 88. So my advice would be one can buy above 88 for upside target of 97. Because if you look at the derivative data also, stock has shown, some sort of, accumulation at the lower level. So looking at the setup, I feel, once the stock manages to give breakout above 88, it may show further upside towards 95. 97 level. So buy above 88 would be the right strategy to adopt for the Federal Bank.
So that's one strategy being recommended by Rajesh on Federal Bank. Let's move on and talk about another stock in focus, and that's essentially banking stocks in general. However, most of them seem to be at the low point. In fact, the Nifty 50 itself is at the low point of the day. The Nifty Bank, I suppose, is leading those losses. But yeah, Varun, what exactly is Kotak highlighting for the banking sector? Okay, you know what? I'm just going to have to interrupt that because here is a big ET Now news break. As you can see, it's a big policy news break. Now, even though the government is likely to see a massive shortfall of around 50,000 crore rupees in the budget from divestment proceeds, it could actually be eyeing the highest ever divestment target of 1.5 lakh crore rupees. This will be in Nirmala Sitharaman's second budget. Ruchi Bhatia gets us this exclusive. Ruchi, in all possibility now, the BPCL sale, the Concor sale will only be completed in the next fiscal. So when the government is looking at 1.5 crore, I'm assuming it's expecting a big chunk of it from BPCL.
Absolutely. Yes, we are going to see a shortfall of over 50,000 crore rupees in this fiscal year from the government's disinvestment target that they had set out. But that is not stopping the government from having a very, very ambitious target, and perhaps a target that is more within their reach than the kind of target that they had set out for this year. I'm saying so mostly on account of the fact that the government has a pipeline ready for various privatization of various PSUs. I'm given to understand that the government could be eyeing the highest ever disinvestment target in the next budget. It could be looking at a target of as much as 1.5 lakh crore rupees from disinvestment in next year. Mostly we could see big ticket completion of privatization of BPCL Concord by the first half of FY21. And that would mean that the government will have enough funds in the equity in the first half itself if these privatization process were to go as per plan. Having said that, certain new ideas in this budget could be that of corporatization of LIC and Airports Authority of India. The government will be looking at listing of these companies in the long term. Besides that, the government will also draw up a list of PSUs where stake has to be reduced below 51%. The cabinet approval for that has already come in. That is something that we can be looking at. And having said that, the government is hopeful that they'll be able to close the NEEPCO and THDC sale to NTPC by this year. Another tranche of PSU ETF is also likely before this fiscal year ends. And for the next year, they believe that privatization of PSUs will be the way to go. As I've been telling our viewers at ET now that the government wants a clean deal on the table, even though we could be looking at missing the deadline in terms of the privatization process for BPCL and Concord this year. So next year it's very much on cards, and we could be looking at a disinvestment target of as much as 1.5 lakh crore rupees. If any target over 1.5 lakh crore rupees is going to be the highest target ever. The government has said that they will be, looking at exploring ways to push growth, and there is a possibility that disinvestment proceeds could be set at a very, very high target, a very high and ambitious target.
Okay, this is the highest ever divestment target that we could be looking at, 1.5 lakh crore rupees. Thank you, Ruchi, for that. But with that, we're out of time on Fatafat. So, Rajesh, Varun and Vivek, thank you for joining in. Stay tuned for closing trades.